All right. Great to see you guys. Hey, James, good to see you. Sorry for the 1 minute late start. I just got off. Seems like I was pretty much nonstop today, at
All
least
right.
since the first half of the, or later half of the day. SPY doing some incredible stuff, gapping up and running, not like a huge run higher, but sort of running higher, especially at the last half or the last half hour of the day. So you can see here, this is now parabolic. You can very clearly see that. If I was going to draw this, it would look like that. Okay, and that's a parabolic move upwards. We are getting very far from the EMA, very far from the EMA 20 and very far the MA 50. So we should expect at the very least a pause, if not a pullback somewhat soon. It doesn't necessarily mean it's going to be tomorrow, but sometime this week would probably be most likely, or next week at the latest. So that's what I'm going to be keeping my eye on for the next few days is, are we going to pull back, or when are we going to pull back or consolidate sideways? This is just way too much, or run up way too much, way too fast. This is the market just taking any excuse it can to run upwards, completely shrugging off downside news and then just overreacting to upside news. So, oh, we have a little tiff with China, and we think that things are, we're not going to have any agreement, and then we jump way up. Okay, so like that was the reaction to downside, and now this is the reaction to upside. It's just too much. It's too volatile. It's not sustainable for markets. And so at some point it will calm down and consolidate sideways or move upwards. Hey, Spider Monkey. Hi, Lise. Hi, Tim. Excited about the new Morning Pay Up Power. Yeah, I'm excited to have you in there. And Steve Fazio, good to see you guys. Okay, so I just want to make a note of that. What do we do in times like these? Like, where are the best opportunities? I gave a clue on my Telegram channel. I was like, hey, let's look at the most overextended sectors, find the weakest stocks in them, and see if we can find any opportunities. I did that this morning, and unfortunately, either we're getting hung up by earnings. We have earnings in the next couple of days or within the week on all of these opportunities, or we have this unfortunate circumstance where the options are not that liquid. So it's making it a little bit of a tough situation. It's unfortunate to have an opportunity, but not really be able to take advantage of it. But we'll see. We'll keep on looking. I'll look again in the aftermarkets with you guys. Hey, Prebnuts, good to see you. Adam or Michelle. Hey, Michelle. Also excited about the morning. Just signed up. Oh, good to have you. Good to have you. I'm excited to have you guys in there. We skipped today because of just the unmatched volatility. So our VIX is now back down to 15, which should make us comfortable. But these gap ups, these huge gap ups, the large ATR that we've been seeing lately, that makes me super uncomfortable. So if I look at this ATR chart, whoops, if I expand this ATR chart, you can see that we had this shoot upwards since October 10th. It just shot upwards and is still very, very elevated. It hasn't come back down yet. So even though the VIX has come down, the ATR has not, which has me surprised that the VIX is down. I guess only because it goes higher. And for whatever reason, we think we have to have an inverse relationship between the VIX and price movement, but that's just not the case. So at least I should say that it's not guaranteed. There's no mathematical relationship that says that has to be the case. It's just the behavioral relationship. So I'm very wary at the moment that not that I'm not bearish or anything, but I'm just wary that this is near a top. We're getting a little over enthusiastic, and we just need a little bit of cool off down to the EMA 8 or EMA 20, and maybe all the way to MA 50, and we'll see. But for now, I'm only really expecting down to the EMA 8 or maybe EMA 20. So let's say, hey, Kay, good to see you. And hey, Kirk, good to see you too. So a little overextended, we will start, or I will look again to see if I can find anything that is looking overextended for a pullback. Or we could just look at the weakest sectors and say, hey, the only trouble with that is is if the weakest sectors are defensive sectors, if this pulls back sharply, then we could have a flight to safety into the defensive sectors. So that might not work out too great for us, but we'll take a look and see what is available inside it in terms of opportunities. Before we do that though, Chris, if you were in the Gamma report, he just mentioned a couple of ticker symbols right at the very end there. He talked about 2 ETFs that are tracking insider trading from Republicans and insider trading from Democrats. So I wanted to take a quick look at that because I haven't seen them before. I thought it might be fun for us to look at them together. First one he said was NANC. That is they call it the subversive. That's really funny. The subversive Democratic trading ETF. You can see up big today, following the S&P 500, gap up, gap up. Okay, so this thing looks like it tracks the S&P 500 pretty well. Probably pretty high correlation there. So if I compare that to SPY, you can see that, yeah, it tracks it really, really, really well, which probably means that these insiders, these Democratic insiders, are sticking to some pretty large cap stocks there. So heavy NVIDIA trading, maybe, I would guess. So that very, very high correlation here. Almost perfect correlation. So that's interesting. And what will be interesting to see is their performance versus each other. So if we look at NANC, and the other one was for the Republicans was Cruz, KRUZ. No, I thought it was K. No, CRUZ. No. Republican insider trading ETF. GOP. Well, Chris said Cruz. Let's see where KRUZ. Oh, TradingView doesn't have KRUZ, I guess. Well, that's too bad. All right, so let's do GOP. Unusual Whales Republican ETF. Okay. All right, also doing very well. Also very highly correlated to S&P 500. So it looks like our politicians like those large cap stocks, or at least stocks that are very correlated to large cap stocks. So let's compare them to each other. GOP, and yeah, they're basically right on top of each other. Looks like, is this showing me that the Republicans are doing slightly better in 2025? They're basically the same. They're all making the same trades. Looks like they're all trading on the same information here. So I don't know the value of splitting them between their Democrats and the Republicans. Maybe it's just more for fun or more of a political thing. But it doesn't look like either side has any advantage in information, and they're both doing pretty well. They're up about 18 to 17, 18%. And if I just look at the SPY, so SPY is up 16.26. So they're doing slightly better than the S&P 500, at least for 2025. Okay. All right, that's kind of fun. And maybe I'll take a look at their holdings. I wonder if I could get a look at their holdings. That could be interesting. Let's see what you guys are saying. Hey, Chester. Tim, spent a few hours this morning, couldn't find anything myself. Yeah, it's really tough. It's really tough to find good opportunities right now. They're toppy, everything's toppy. So you don't really want to go long, and then the shorts, they're just not giving you opportunities. Then earnings is kind of messing everything up as well. All right, Ken, institutions aren't driving this, right? It's the retail traders. If you see an S&P move like this, it's definitely not retail traders. There's institutional involvement for sure. Otherwise, there's no way retail traders can make the S&P 500 gap up. So what's happening here is right now, Chris talked about this a little bit also. They're thinking about putting in 5x leveraged ETFs, which is crazy to me. 3x isn't enough, 2x is enough. It's so those are institutions, right? I mean, retail might buy into those ETFs, but those ETFs are buying up the underlying stocks and derivatives in order to get the 2x or 3x or 5x performance. So if you see an ETF that's promising 2 or 3x or 5x, they have to leverage themselves. The way that they leverage themselves is most likely through some sort of options strategy. Maybe some futures and things like that are involved also, but the number one go-to would be the options market. And then if you go and you buy a whole bunch of options, well, then you're artificially controlling, or I guess I shouldn't say artificial, but synthetically controlling the underlying stock as well. And so you have these calls and these puts that are controlling the underlying stock and the underlying stock movement itself. And you have all this leverage in the system. That's how you get these movements upwards. Okay, so it is basically either institutional or institutional products that are allowing this type of movement to happen. Yeah, where's the optimism? Well, I mean, for now, it does look like that it's just temporary, right? I'm not bearish. I'm still this slightly bull, and I'm waiting to be comfortable with where the market is in order to go number two to full on just regular bullish. But for now, it's just that this is too much. This is too much. There's too much volatility. So it's really hard to use your normal strategies. In high volatility environments, you've got to use different types of trading. And I've been hesitant to show everyone that type of trading because one, we don't have volatile environments all that often. And number two, it might confuse you because then you're like, oh, Kane said to do this. But then now he's telling me to do this. Well, the only reason I'd be telling you to do that is because you're in a different environment, right? The way that you drive when it's stormy and there's like 45-mile-per-hour winds is not the same way that you drive when it's sunny and 80 degrees out. It's just you have to drive differently if you're going to operate your car safely. So the rules that I use during high volatility are not the same as normal. And just like on the road, the rules that I use when I'm driving in snow or driving in a blizzard or driving in a thunderstorm is not the same as I would when I'm normally driving. And I don't want to confuse you guys, so I've been hesitant. But if this keeps up, maybe I have to switch up over to some volatile strategies over here. So look at the price of options are so high, so someone is buying at that cost. Only if there's open interest, Chester. Only if there's volume and open interest. Yeah. How will Amazon layoffs affect SPX? That depends on how it's going to be viewed by the market. So number one is still rumors, not fact yet. So we don't know. So far, the rumor came, did it come after markets or during markets? I don't really know. Let's see if we have anything here. Earnings, yeah, report 10% of its workforce to reduce costs after a pandemic overhiring. Okay, so if that's the justification for it, most likely that is going to be viewed favorably for Amazon itself. Okay, so generally shareholders or investors or players, traders in the market like to see cost cutting. And they like to see, basically, hey, you're working on your profit margin, basically. And if the reason is not because, hey, we see that we're seeing less sales, or we're just not getting the support or the revenue, and we need to cut back, that would be viewed kind of negatively. But at the same time, people we like that we're cutting back on the costs. But if their reason is like, hey, we overhired in pandemic, the pandemic was huge, and now we don't need all these people anymore, that's probably going to be viewed favorably for Amazon itself. Now, macro people will be like, oh, this is terrible. Like, look at all these jobs that are being lost, and that'll show up in some monthly employment number sometime down the road. So longer term, It may be interpreted by some people as a negative market event, but for now, it's not really. If anything, it's probably going to be viewed favorably. But of course, it's happening right before earnings. So you may not see that get priced in too much because everyone's waiting to see earnings. Now, if they see layoffs and their earnings are terrible, then you're probably going to see a very big negative reaction. But we'll see. So it has right now we're going to be more dependent on the news about earnings than we are about layoffs at Amazon. I don't know why AMZ, is that the same? I guess it's the same. Yeah. Okay. All right. Okay. Let's see where we are. Okay. Great. So I just want to check just out of curiosity. Let's see what these Congress people are into. No constituents. How about here, GOP? At least bar chart doesn't have them. Nope. How about ANC constituents? There's probably a insider or a Congress tracking website that shows all of this. Holdings. Holdings. There we go. Hey, I was right about NVIDIA. NVIDIA, Microsoft, Google, Amazon, Apple. Look at that. 5 out of the 7 Mag 7s. And that's basically why, and here in the top 10, you've got Meta right here as well. And so 6 out of the 7. So that's basically why these ETFs are performing the same way. Now, are these actually, like, is this blend the same blend that each individual senator or congressperson has? Probably not. So I don't know how they're determining their weight. That would be a little bit more interesting to see. But I'll find a service that tracks their, like, each individual's. I have one somewhere. I don't, it's not data that I use, so I don't have it off the top of my head. I've got it somewhere, saved somewhere. I'll take a look and see, and it can be fun to analyze their positions. Yeah. Oh. Okay. How will, oh, no, it's the same question. Amazon layoffs, yeah, basically not really seeing it affect Amazon yet. The earnings is going to be far more important. Although it could amplify if we have a negative result from earnings. All right, so Autopilot app tracks some of cars, folks. I have heard about Autopilot, but do they give you the holdings? Or you just give them money and they automatically do it for you, from what I understood. Yeah. Oh, it lets you do hedge fund managers too. I wonder how they find out the positions. Because if it's hugely delayed, like if you're doing like reports, like reporting like 10Ks and things like that, then I don't know. I mean, in the last couple of years, you probably did well just because there's a giant melt up of everything. But in terms of following long term, if you always have that quarter delay, couple months, 2-3 months delay, I don't know how helpful that's going to be. Okay. Maybe it is. It's just something I haven't super investigated. Oh, they show positions. Okay, cool. I'll look into it. Okay, so let's see. I was thinking, yeah, it's hard to justify looking for positions right now at this super high top parabolic movement upwards. These are times where we would look to take positions off. So actually, this is a really good topic. How do you know when to exit positions? Okay, so presumably your system should tell you. But if I didn't have a specific system, if I was going to say, like, let's go PLTR or something that is run. Okay, yeah, I think this will be pretty good. So let's just say I enter over here. Okay, why over here? Because we have a trend. Same thing I always tell you guys. You have a longer term trend that is up, as measured in our case that I've always told you guys about is the MA50. And then we have a shorter term trend reverting back to agree with the longer term trend. That is a good entry point for, say, anywhere from 1 week to 1 or 2 months, okay, depending on how each individual stock is moving. In the case of Palantir, at least so far for this portion, what we've seen is that it's been good for here is about a week, and then here is about a week, or a little less than a week, and here is good for about 3 weeks. And so this looks like the move of another leg higher on the shorter term. This is good entry. I could expect that for anywhere from 1 to 3 weeks. So how do I know when to get out? How do I avoid this day right here, potentially? I mean, you can't avoid them all, but how could I potentially avoid it? Do I get out here? 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 How do I know when to get out? Is this a good topic for you guys? Do you like this topic? I could talk about something else if this is of no interest to you guys. You know how to exit your positions. I'll wait for the delay. I'll wait like 10, 15 seconds just to make sure you guys have a chance to type in. Thoughts on CLS? I can take a look at that. Stephen Boyd says yes. Yes, 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 yes. Okay. So I'll go to CLS after this. Great topic. Okay. So there are a few criteria. I would say 4 major criteria that I would look for if I was going to get out of this. And I guess as a portfolio manager, I would actually add more onto that. But as a short-term swing trader, I would go 4. My idea as a short-term swing trader is that I should sell into strength. Okay, have you guys heard that before? Sell into strength. Buy into weakness, sell into strength. And that's what we're doing right here, okay? So if this comes and it bounces right here, then we're trying to get in right as that weakness is changing into strength. So you've bought into weakness when you've entered, and now we want to sell into strength. And we need a way to identify that strength, okay? So your first opportunity to sell into strength would be on a price bar that is significantly larger than any in recent history. Okay, and we can try to put definitions on these, but it's going to be characteristic, or it's going to be different based on each stock that you go into. So if I'm evaluating this run up, I want to see this was a pretty big bar relative to these bars, and then it kind of pulled back. This was a pretty big bar, then it chopped sideways and then pulled back. And then this was here, let me circle them so I don't confuse you or myself. Let's go over here. Okay, so we had this bar. Oops, that is not behaving the way I thought it would. Okay, let's do an ellipse. Let's see, how does this work? Okay, that bar. We got that bar. And we've got this bar. Okay, but this one's kind of the same as these. So I'm going to delete that one. That's not too helpful. This one is bigger than these, but they're not hugely bigger. This one's big, right? This one's big, and then it did kind of pull back from there. This one's pretty big. It did chop sideways. It did continue. But in any case, this is a pretty big bar, okay? So I'm looking for these relatively large bars to indicate that they're not their only indication. Remember, we've got 4 that we're playing around with. So, but one of the signals is this large bar compared to the normal bars that we see, the large bar upwards, okay? Does this count? Well, this is 4.85%. This is 7.33%. This is 7.5% if you only do the body. Okay, so I probably wouldn't count this. 5% versus 7.5 on these two. But some people might. So this would be an okay exit. Okay, so let me just say that right there. Where's my... let's do a down arrow right here as an okay exit. Not super great. I probably would not have taken that myself, but I wouldn't blame you. Yeah, if you're a little bit more conservative, you would take this exit right here. Okay, so that's one type of exit. So sell into strength. What happened? Did I delete these? Sell into strength. Largest bar, green bar in recent history. Okay, that's one. 2 would be largest volume bar in recent history. And you can see sometimes they coincide, like this one. This was the largest green bar and the largest volume bar in recent history. This one was the largest green bar and kind of the largest volume bar in recent history if we ignore the red. Like going all the way back to here, it was the largest one. Okay, but it's not significant, not hugely larger. So this would be a much clearer signal than that one would have been. Okay. The third one would be can I edit this? Yeah. Okay. 3 would be a large gap up or series or 2 or more gap ups in a row. Okay. And number 4 would be large volume doji candle. Okay. So basically, if I get a large volume bar, but the price doesn't really go anywhere, that's a sign of exhaustion. Okay. So there's a lot of activity, a lot of transactions, but the price didn't really move. Okay. So let's see what we get out of Palantir. Remember, we entered right here. Where's my circle or my ellipse? Oops, not there. Not there. Right here. We enter right here. Okay. And we've determined that this would be an okay exit, but not quite what we've seen over here. So not quite a number 1. So I'm going to keep on going. Okay, so it does keep on going up. And so far, I haven't hit any of these 4 criteria yet. Okay, so I could also sell on weakness. So if none of these hit, ideally I sell on strength. But if this pulls back to the EMA 20, if we close below the EMA 20, I will also exit there. Of course, on my stop loss. If I had set a stop loss down here, let's just say, then I would exit there too. But right now we're well beyond that. It went up since we got in. So if we close below that EMA 20, then I will also exit. We don't, we move up. That's a pretty large bar, but not as big as that one. No large volume yet, no gap up, no large doji candles. Okay, keep on going, 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 keep on going. Oh, tagged the EMA 20, but didn't close. Keep on going. We have earnings right there. at the night. So we do have a little bit of activity. So we would consider exiting right here, okay? Just because of earnings. That's a pretty good win, right? How many of you would be happy if you entered on this day and then you exited up here? That's way too big of an arrow. You'd be pretty happy, right? So let's see what that is in terms of just say you entered at the close. So let's make it more difficult for us right here. Enter at the close, you exit at this close because of earnings. Okay. You made 15.3% on the underlying stock, not even options, on the underlying stock, and it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 trading days. So roughly 1 month, okay? July 8th to August 4th, roughly 1 month right there. That's a pretty good gain, 1 month gain. Okay? So if you can go up 15%, depending on which options you picked, that's probably at the very least a 100% gainer on your options in a month. It took a month, but that's still pretty good for a month. Doubling your money in a month is not a bad result. Okay, so let's pretend we didn't have earnings there, and let's just keep on going and see. Okay, earning. Okay, boom, largest volume bar in quite some time. And not necessarily the largest price bar, but we did get a large gap up. Okay. So that fills the criteria. Yes, it happened to come on earnings, but that fills the criteria as well. Okay. So we could say this one. That would be a good exit too. And if you had dared to hold through earnings, then you would have made 16, not that much more, 16.34% because of that earnings pop right there. Okay, so that both of those are good exits. So I wouldn't do this earnings run, right? Don't take the risk. Why take the risk? You made 15%. You don't want to give it all up just because of an earnings play. So we're going with this one. Okay, it was really, really, really good exit. Let's find the next entry opportunity. All right, so let's go. Okay, it did happen and keep on going upwards, but are you crying at this point because you entered here and made all this? I wouldn't be. All right, some people would. Okay, some people would be upset that there was more upside, but I wouldn't. And now I'm just looking for the next opportunity, and look how quickly this is why I don't like selling into weakness. Okay, because the weakness can happen fast, really, really fast. So I like selling into strength. Okay, this is almost back to where we entered, just in that little drop right there, or that single day drop right there. Okay, so I'm looking for a re-entry. Basically, I'm waiting for this EMA 8 to move back upwards. Okay, bounce off the EMA 50, or sorry, MA 50. Still moving down. I'm looking at that EMA 8, hugging that MA 50, EMA 8. Oh, crossing the MA 50. That's not great. Okay, oh, right there, you see that EMA 8 did barely cross below the MA 50, but now it's pointing back upwards. And then can I send this backwards? Send backwards, send backwards. Send backwards. Bring forward. Can I bring this forward? Bring to front. It's not letting me. Basically, somewhere in the middle of this bar is the EMA 8. Okay. And so we did that. EMA 8 is now pointing upwards. This is a signal, short-term reverting to long-term. Okay, because that long-term trend never stopped being positively sloped. And so we could say, let's try entering on this day. Okay. And we'll set our stop loss over here. Okay. And we'll go. Okay, we don't have a high volume bar. We do have a little bit of a gap up. It's not a large gap up, so I wouldn't be exiting there. Okay. Bigger bar, but that's not really a 7.5%, I don't think. Okay, that's only 4%, less than 4%. Okay. How about this one? I've changed the scale, so I don't know anymore. So 4%. Keep on going. Larger green, but nothing compared to this. So I'm not going to exit here yet. Okay. Close below the EMA 20. I exit right here. So this time I sold into weakness. And this time I have still not bad, 6% gain in the September 9th to October. Well, again, just under a month, roughly a month. Not as good as this one, but not bad. Okay, let's try that again. Okay, so yes, this EMA 8 did turn again, so I could re-enter right here. If I'm a religious follower of PLTR, I could re-enter right here. Okay, and then I stop myself up. That would be a loser. Okay, so that's a loss right there. And that would be a loss of, we're just going to go close to close, okay, 3.7%. Okay, so I had a 15+% winner, then a 6.7 or 6.5% winner, and then now I have a 3.7 loss. I'm still doing really, really well. Okay? Even if I've only did this second trade right here, I'm still up 3%. Okay. Let's see how long we can go for this. Okay. There we go. We enter right here. I want to see if there's a really good exit example. Okay, and then we're where we are right now. Okay. So, and why didn't I guess we may have stopped out of this one also because it closed below the EMA 20, but I don't know if I didn't set a stop loss. Unfortunately, I should have. So I don't want to do in hindsight and say, oh, I would have put my stop loss here. So I should have done that before we continued, but so hard to say. The last one I'll just remove. Okay. Let's try a different ticker. You guys want to try a different ticker? Give me a different ticker. But in any case, my point here was that if you're doing that on the SPY, we will do it on another ticker. But my point is if we were doing this on the SPY, not a huge green bar, not a huge green bar, not a huge volume bar, not a huge volume bar, but we did get what? 2 gap ups in a row. Will we get a third one? I don't know. But this 2 gap ups in a row, and they're fairly significant gap ups, I would be taking profits right here. Sell into strength. Okay. F. Okay. So let's do this signal right here. This one right there. Okay. Okay, so we did have a mild uptrend beginning from here. So this is the long-term trend matching the short-term trend. So that's a change of trend. So this was the beginning of and that's why I chose this particular area. Where's there we go. Okay, so this is the beginning of that uptrend on the 50-day. okay? When it went up to match that short term. That's the first leg of it. And then this short-term trend went against the long-term trend and now is just beginning to match it. I guess maybe the day before, but we'll go with this one. We'll be a little more conservative and say we entered over here. Maybe it's easier with arrows. No, that's too hard to see. Let's do the ellipse again. Okay, so I enter on that. How do I know when to exit? That's not really much of a gap up. That's not much volume. That's not much of a bar. So I keep on going. We pull back to the EMA 8, then we recover, not really recover, and then we try again. Okay. And here we start to move. Okay, not really. Large volume bar. Is it the largest in some time? Yeah, but it's not hugely larger. So I could maybe consider exiting here, but I'm not going to. I want to see if this keeps on going. There you go. Large volume bar, not the largest, obviously, but this is clearly the largest green bar that we've had in quite some time. So this is the first criteria. Criteria number, it's not even, was on a different symbol. But this fulfills criteria number 1. We exit right here. Okay, so that is a 6.78, 6.9, about 7% gain from June 10th to July 2nd, about a week less than a month. Okay, so about 3-week trade. Not bad. Not bad. Okay. So you guys getting the gist of this? Of course, this went up higher. Okay, you're never going to catch the perfect top. But if I can capture the bulk of the move, 70, 80% of the move, then I'm good. So let's see if this, like in hindsight, if this kept on going higher or if it kind of tapered out. Yeah. It kind of tapered out, right? Kind of traded sideways for a little bit. See that? And now came back. That's weakness. That's weakness right there. It closed below the EMA 20. So I'd rather sell into strength than hang on to it and hope for something better and just to see it come back down in weakness to below where I would have exited anyways. Plus I held on to it for another additional 2 weeks where it did absolutely nothing. And I end up lower. So not only am I giving up a little bit of the profit right here, but I'm suffering time decay through this and utilization of my money right here. So that's a pretty good exit. And if I were to measure this move and say, okay, I exited at 7% versus I could have exited at, say, 11%, well, I got the majority of the move, right? 7 out of 11 is probably like 60%, 64% of it. Okay, not quite 70 or 80%, but that's not bad. That's not bad. Okay. Thank you for showing us these guidelines help decision making. Good. Yeah, you're very welcome. You're very welcome. So that's why I am cautious on the SPY right now, because if I had a position on an SPY, I would want to sell into strength. And what would have that position have been? It would have been right here. Okay. Why? Because that's when the short term reverted to the long term trend. As I've defined it for you guys every time since we started the post-market review, the longer term trend as identified by the MA50 and the shorter term trend as identified by the EMA8, this is where it turned around. So if I had entered on this day, even if it was the close, and I exit today, why? Because this is the third criteria for selling into strength, multiple day gap ups or one huge gap up, right? Then I'd be exiting right now. And that would be that's only 2%, but it was only 1 week, right? So I'm just saying, be cautious here, because this is the time I would normally be looking to exit and not looking to put on positions, right? Because what follows after this generally is weakness, as we saw in Ford, as we saw in Palantir. Okay, and then so someone asked me, should we not wait for the red bar to exit? Okay, so we could, if you wait for the red bar to exit, then you're looking for weakness. Right? You're no longer looking for strength. So basically, what we shared with you earlier was this entry right here. Oops. That larger bar right there. And then we would have exited right here. And you're saying, well, what if I wait for this? Okay. And yeah, sometimes that works. But you're exiting on weakness. You could. And in this case, it would have worked out a little bit better for you as long as that time decay, depending on your expiration, right, didn't destroy the value here. But it's not going to do it every time. So for example, this one right here, if I entered on this bar right here, then well, I guess that one would have worked out too well anyways. So right here, this is a great example. I don't like to exit on weakness because weakness, as I said, can happen really fast. So if we exit on strength, it would be this. And you would have close to close, you would have a 5.5% gain. Okay, but if I wait for that red bar, then I'm going to exit on this one. And don't tell me you would know that's a red bar at the open. You wouldn't. You wait, okay, it's a big red bar and it closed below the EMA 20. Okay, so what are you looking at right here? What could have been a 5% gain just 2 days later is a 1% loss. Okay, so I don't like to exit on weakness because that weakness could happen hard and sharp. This wasn't even the Trump announcement day. October 10th was the Trump announcement day. So this happened a few days before that. This is just a regular day. It wasn't even a news day. So weakness can happen hard and fast. So I don't like to sell on weakness. Does that make sense, Kirk? Okay. All right, so hopefully you liked that lesson and you learned a lot. Let's take a look at CLS as I promised. Because you had a flat bar before the red. So, because you had a flat bar before the red. This is a flat bar? Well, it's not a doji, but I don't know what you're saying, Kirk, but maybe it's something good. I don't know, but I would have exited on this bar. And you're saying you got a flat bar on the next one, so you would have exited on this bar right here. So basically, you have to lay out all your criteria. So just like I laid out, these are the 4 circumstances that would cause me to exit. So, hey, if you're saying, hey, I will exit on a red bar, except under these X and XYZ conditions, then we can evaluate whether or not your exit on a red bar makes sense. Okay. So for example, if I said I was going to exit on this bar because there's a gap up and run right here and it's significant. So this fit three of my criteria right here, right? There's a gap up, a fairly significant gap up. Okay, that was a gap up of 2% and then actually 4.6% in a single day. Then, and this volume is by far the largest volume bar in quite some time, all the way back to here, actually, all the way back to July. And this is the largest green bar, not by a huge margin, but it matches this green bar, which was the top of the previous one. So 3 out of my 4 criteria all hit on the same day. I would have exited on this day, and we were getting pretty close to earnings also. And if you say, oh, well, I would do a red bar, okay, the red bar the next day, and you would exit slightly worse, okay, and you held on for 1 day longer. because you had a flat bar before. You gotta tell me exactly what we're looking at, Kirk. So this, so we're talking about this period right here. So you tell me, and we'll walk through it. Okay, so we're talking about this period right here. You had a flat bar before where? This one? Remember, I'm entering on this one. Okay. September 26th. Yeah, that's before. Yeah, this is the day we entered that trade. Not, so you wouldn't, it doesn't make sense to say the exit, because remember, our criteria is for this exercise was close to close. So if you entered on the close right here, you wouldn't also exit on the close of the same bar. Okay. Okay. So let's take a look at CLS. So CLS had, so, well, number one, there's earnings. Okay, so there was earnings after markets today. So you would want to exit this anyways if you had entered. So let's just say that you were following the methodology. Well, the longer term trend is this MA50. The switch upward was on this bar right here. So we'll just say that we enter right here. Okay, at the close. And then this never violated that EMA 20, so we hang on to it. This looks like a normal bar, right? Normal bar, so that doesn't count. Then gap up right here. Okay, I said a series of gap ups, or 2 or 3 gap ups, or if it was a significant gap up, so we need to determine if that's a significant gap up. So that's a, oh, sorry, at the open. Yeah, at the open, it was a significant gap up, 7.23%. We would exit it on this bar right here. So we would not have even held on to this all the way to earnings, but just say we did for whatever reason. Gap up, definitely out today, and earnings the next day, so, or tonight. So for sure we would be out today, out of this trade. Okay. So that's how the same criteria works on the recent price action in CLS. Okay? And we would have made pretty good money either way, either over here on the gap up, open, or close, doesn't matter. We made pretty good money in just a week. And then if you held on today till today, another week and a half or 2 weeks, that's a pretty good gain right there. Okay. Wow. That occupied basically the entire session. I did not expect that, but I think it was a good topic. Hopefully you guys got a lot out of that, and you can start using that for some of your criteria. Like if you don't want to wait for your system or your expert to tell you, hey, it's time to exit a position, those are some pretty good selling into strength. There are people who sell into weakness. You say, okay, well, I want to, I want to wait and try to. I rather hold past the peak and exit instead of me. I like to hold before the peak and exit, or maybe I might happen to get lucky and get the peak. But the people who hold after the peak, they'll never get the peak because they look for that weakness afterwards. And then, like I said, that weakness can come hard and sharp and completely undo a significant portion of your profits, or even all of your profits. And that really sucks because you were in a really nice winning trade, and then one day later, boom, all of a sudden you give back a huge chunk of it, or you're suddenly in a losing position. Okay, let's see. All right, guys. Looks like you guys learned a lot. That makes me super happy. Tomorrow I'm going to be on a plane after markets, so I won't be able to do the post-market review, and I'm going to be occupied after markets on Wednesday and Thursday. I will, if I can, I will do a post-market review, but later than the normal session, and it would have to be like probably 7 p.m. Eastern at the earliest for Wednesday, Thursday. But we'll see. I'll let you know. I'll keep you guys updated. Okay. All right. Have a great Kirk. The previous example. The previous example on Ford. You're saying exit September 26th. Yeah. I don't know if I'm gonna exit September 26th, but then that's not a red bar. So I imagine you mean September 29th. And then on the previous example was here. This was the entry. So I don't know, or maybe it was a different entry. I'll have to see. In any case, email me, Kirk, and I'll be happy to take a look at what you're talking about and give me your criteria. This is I entered here because what was it, the short-term to long-term reversion, or are you using some different entry requirement? And then I'm exiting under these specific conditions, like I gave for you. Under these specific conditions, these 4 specific selling into strength, or these 2 specific selling into weakness. We cross back below the EMA 20, or we hit our stop loss. Okay, you give me that whole, it's got to be the whole system. Otherwise, we can't really evaluate it. Okay, email me and I'll be happy to take a look. Okay. All right, guys. I will see you later and have a wonderful rest of your day. Bye, everyone.